Since 2008, the world hasn't just been recovering from a financial crisis. It's been completely reshaped by it. We entered a new era of predictable money cycles, surging government debt, and silent inflation that eats away your wealth. And if you've ever felt like you're working harder just to stay afloat, you're not imagining it. Today on Crypto Clarity, we break down how the financial system was fundamentally reprogrammed and why Bitcoin might be the only asset truly keeping pace. After the 2008 financial collapse, governments were buried under mountains of debt. Many had debt levels exceeding their entire GDP. The solution? A quiet restructuring. Interest payments were pushed aside to buy time, and growth was used to reduce the principal, not the interest. This set off a chain reaction. Central banks began injecting liquidity into the system in carefully timed cycles, about every 4 years. A wave of new money would pump markets, stimulate growth. But here's the kicker. The liquidity was never fully removed. So each year, more money entered the system than the last. It's estimated that global fiat currency is being diluted at around 8% annually. That's 8% less purchasing power every year, even if prices seem stable on the surface. What happens when you evaluate markets in this context? Most traditional assets, stocks, real estate, even the S&P 500, are barely keeping up. Once you adjust for that 8% debasement rate, they're flatlining. That's why so many people feel stuck financially. Your investments might show gains, but when measured in real purchasing power, they're treading water. Now, zoom out. Which assets have consistently outperformed? 2. Tech stocks and Bitcoin. And here's the wild part. When you compare tech stocks to Bitcoin, even the best performing ones have lost over 99% of their value against BTC over the past decade. Here's the deeper issue. Global populations are aging and birth rates are declining. Fewer workers mean slower growth. Governments can't rely on productivity and population anymore, so they resort to the only tool left, borrowing more money. This fuels inflation, raises the cost of living, and stretches inequality. In turn, that discourages people from working, which reduces GDP even more, triggering another round of debt. It's a vicious loop. And make no mistake, this isn't just a theory. You're living in it. The next disruptor? Artificial intelligence and humanoid robotics. By 2030, AI could trigger a labor revolution. Jobs, productivity, even GDP calculations as we know them, could be obsolete. AI will be the most deflationary force in modern history. So, how do you protect your future in a world of digital abundance? You turn to digital scarcity. Bitcoin. Bitcoin's supply is fixed. It can't be inflated. It's programmed to be scarce, and that scarcity is already drawing in institutions and companies around the world. Over 250 corporate treasuries are now holding BTC as a long-term reserve. Here's the math. With roughly 3.6 million BTC lost forever, only around 8.2 million coins remain for 8 billion people. That's just 0.011025 BTC per person. The question is, will you be one of the few holding more than your share when the financial reset hits? Thanks for watching Crypto Clarity. Drop your thoughts in the comments, and if you found value here, hit like and subscribe. We've got much more coming your way.